This episode is sponsored by Pareto Holdings, which was founded by John Oringer and Ed Lando to invest and incubate the next generation of startups. John and Ed and the team at Pareto are launching and incubating companies based right here in Miami. Recently they just announced the Pareto Pre-Seed program, which aims to be the first check in to help founders get their ideas off the ground. I think what makes this program really interesting, and I've talked to the team over there, is that they're going to try to get back to applicants that are trying to start these companies within 48 hours and make investment decisions after one short call. That means that founders can have pre-seed funding in their accounts in as little as a few days. So if you want to learn more about this program, visit pareto20.com. That's PARETO20.com. Hey everyone, welcome to episode 32 of the Miami Tech Pod. I'm Cesar, and we got a packed house today. We got Maria, Brian, and Will with us, and some special guests. Chris Adamo, the Pied Piper of Miami's tech scene, the co-founder of Flamingo Capital and chief business officer of Letterhead, as well as the co-founder of Letterhead. Chris, welcome to the Miami Tech Pod.
What's up, y'all? Happy to be here.
And we got our first returning guest in the house, Adam Garfield. What up? How you doing, man?
I'm back. You're stuck with me again on another pod. I'm sorry.
And of course, everyone knows Adam, the YouTube star. But Adam, of course, was one of our first guests on the Miami Tech Pod. He was the co-founder and CEO of Speedy Tab, sold that to Wix and became the VP of restaurants over there. So we're thrilled to have you back on the podcast.
Thanks for having me.
And this is going to be a cool episode because Will has a couple hats on today. As of course, everyone knows he's a host of this thing, but also, he is one of the co-founders of Flamingo Capital, which Adam, Chris, and Will started. It's a syndicate that invests in early stage companies here in Miami. And guys, why don't you give a little bit of a background of the origins of Flamingo Capital, how it started, and tell the listeners a little bit about it.
Happy to. Yeah. So I'm Chris. Adam and Will and I have been friends for a while. And we always had the idea of we need to get involved and start investing together in things and, really help Miami level up with the connections between founders and investors locally and also across the country. So about a year ago, I met Aaron Hirschhorn. We all know him, a great founder who passed away a few months ago. And me and him had an idea of we should really start a rolling fund for Miami. Many awesome people are coming in Miami in and out. We should definitely make something that they can stick onto and start getting involved. And of course, his passing was super. For me, it was very impactful. I felt it a lot, and I wanted to honor him by doing this thing. So Will and Adam happened to be still game, and hey, we should do this thing. Let's get it together. So we did. So a few months ago, we decided to open up capital to obviously just support the system of Miami, getting it kind of leveled up amongst people who don't live here and who have been here before. And we figured we can pull together our awesome ideas and the people that we've met and start co-investing together. And that was basically the simple idea of we thought it was a need for us here. And I think that it's picking up steam. We're seeing other people in Miami doing the same thing. You'll see a lot more people, I think, do syndicates in the near future. Because they're just so accessible and I think has never been easier to do it before. And I think the access there means a lot for our city.
That's wonderful, guys. And Adam, you guys have already started rolling out a couple deals. For full disclosure, I'm a member of the syndicate and invested in the first two deals. But why don't you share with the listeners a little bit about the companies that you guys have put in front of the Flamingo Capital community of investors and have already started closing rounds?
Yeah, definitely. And I think first, just to piggyback on what Chris was saying, is that all of us at Flamingo have been operators and startup guys and entrepreneurs. And I think it's very rare within the community to see investors that have that kind of operator experience. And I think on our side, a lot of this stemmed from, man, how can we be the investors that as entrepreneurs and founders, we wish we had, in our meetings or advising us or helping us along that journey. And I think that's one of the big things that Flamingo brings to the table, along with some incredible LPs, you included clearly, can bring to these companies. So the first company that we brought that to is TempMe. And so TempMe was actually to bring Will into this, a company that Will met through the On Deck program here in Miami. It's a local startup, local founder, local founding team. And they're really a marketplace focused on the skilled professional temp side of agency work. So starting specifically within the dental practices and hygienists, how do we better pair dentists with hygienists? And this is actually a hugely in-demand market. So many folks don't know that dentists, primarily on the hygienist side, use temp agencies to fill those roles often. And these guys have done an amazing job of building a marketplace for that so far. And I'm sure there's a lot of other sectors that need that kind of experience and marketplace in terms of high skilled labor as well. So since Will was the originator of meeting TempMe, I'll let him give a little more color.
Yeah, actually, I think just a quick clarification. We met, or you met Trend through On Deck. I actually met Ed at TempMe through Raul at the Knight Foundation. And then Ed, one of the founders, ended up joining the Local Leaders Collective, which you guys also know that I run as well, peer support group for entrepreneurs in South Florida. So I got to know Ed, and also his co-founder. And man, I mean, just what amazing human beings, full of energy, full of positivity, love what they're doing, passionate about the space. And you could just tell right away, there's a certain people you meet, you sit down with, and like within 15 minutes, like this is somebody you want to work with in some capacity and help in any capacity. And I think like a lot of the things that we do in South Florida is like focus, like how could we help our fellow entrepreneurs? How do we help our fellow peers? How do we connect the dots? I think to tie this back to, again, one of the main reasons we wanted to do the syndicate is like Chris, Adam, and myself, operators building our own startups, have that empathy for entrepreneurs. And now that, we're able to invest some dollars, we want to kind of pay it back and support entrepreneurs. But at the same time, we write small checks as small angels personally. We're all building our own things. We're all working full-time jobs, have a lot of things going on in families. So how can we put together a structure that we can pool together a lot of these amazing folks in Miami that we know, a lot of these folks that can be LPs, and actually write meaningful checks into startups rather than like, small angels, but like give them a nice injection of capital and then all that value add that comes with that pool of capital as well. So all these great investors that could add value, across different sectors of the business. So I think, with us and with TempMe, it started off as like, we got to find a way to help these guys. They're awesome. They're doing big things here in South Florida. And that became like natural, and the timing worked out perfect because we were just launching Flamingo to, launch with them as our first portfolio company. So we're super excited about TempMe. Expect big things out of them, some major announcements in the next few months. And I'll let Adam talk about, Trend and how that came about.
Hey, Will, really quick before we move on to Trend, I want to just unpack the business of TempMe a little bit, because I think it's like really fascinating. I may have said this a couple times on the pod, but my wife Eileen is a dental hygienist who's in her 4th year of dental school and is about to be a dentist, and she's worked in practices and kind of has that vantage point of like the entire flow operationally of a dental practice gets screwed up when something as simple as like one dental hygienist in an entire practice is like sick for a week, right? Or COVID or something like that. So they do go through that. That there is a need for like temporary workers, but it's also not completely replaceable, right? Like you can't necessarily have someone who is like built a treatment plan for a patient and like just have a substitute provider every time. So there's a bit of friction here. But I think what really drew me to this company is that they're super focused and they're building it in a really, really good market for dentistry, right? Like there are a ton of dental offices here. Like if they're trying to like really get this product market fit, Miami is like a perfect way to just onboard like dozens and dozens and dozens of clients or users or members, whatever they consider the actual offices, and really like work out all of the kinks before they deploy this through a bunch of different or in a bunch of different markets.
100%. I think in general, that model, it's been very generalized for a long time, just temp agencies in general, right? And it's been kind of just horizontal and widespread. There's a ton of inefficiencies, as you know personally, Cesar. So they picked the great market. They're hyper focusing on this market, absolutely nailing it, building specifically for the dental industry. So all these like pain points that temp workers in the dental agency have on both sides of the equation, the workers and the dental practices hiring these folks. And then ideally things continue to go well. You do the Amazon, strategy where Amazon, you focus on books, you nail books, and then you explore other verticals and you build out a big platform. I think, TempMe, you could see similar ambitions with this particular company.
And there's efficiency on the other side too, which I think is fascinating, where like you think of it as temporary workers if you have to like fill a vacancy very quickly. But there's a lot of small businesses that have, a few dental assistants, a few dental hygienists, one dentist, where they're not necessarily at the recurring revenue to hire like a second dentist or a second or a third dental hygienist. They're somewhere in between, and they're turning away a ton of business or having a lot of like lags in scheduling because of that. And this is like a nice bridge to being able to like expand for a lot of companies. So I don't know. I just wanted to share why I was personally pretty pumped about the model.
Love it.
One cool thing that I learned. Sorry, go ahead, Brian.
No, I was curious. Like one thing that I'm curious about is like, are there standard EMRs or like practice management tools that this could tie into? Because like I could totally see if they've got an existing scheduling system, an API call to suddenly like fill a spot, or something like that.
Yeah, I think actually I was with the TempMe team yesterday and talking a bit about the importance of channel and just distribution strategy and integrations and what that looks like in the dental world. And I think that there's a lot of interesting opportunities there for those guys. And again, it's just how do you make everyone's life easier? We get excited in the tech world sometimes about the tech behind things, but for the majority of the population, they could care less. All they care about is like, does it work? And is my life going to be easier? And am I going to make more money? Like those are the core principles. Are my customers going to be happier? Is my business going to be more successful? And the way that you can help businesses do that is by really streamlining what they're doing. And so that goes to your point, Brian, in terms of like, how do you bring multiple platforms together in a way that's just making their life easier and streamlining it?
And the second company, Adamo, that you guys invested in was Trend. Is that correct?
Yeah, Trend.
Why don't we talk a little bit about that, or Will, if you want to jump in, whoever sourced it, I think is probably best to talk about it.
Yeah, I can take it. So I met Ramon, who's the co-founder and CEO at Trend, through On Deck. I also met actually the TempMe founder at On Deck briefly, and then he met Will, but met him through On Deck as well. And with Trend, what's really interesting about their platform, you can think about them as Cameo meets Fiverr, right? So Cameo, everyone or most everyone knows as that platform where celebrities can go on there and they make quick 30-second video and they get paid a flat small amount of money for doing that, and you pay them a flat small amount of money for doing that. But what if we open that up to everyone else and people that aren't necessarily celebrities, but to everyone that has a phone today and that is part of that creator economy? We're all content creators in one form or another, whether that's through photo, whether that's through video, whether that's like short form, long form, raw and real, or cinematic and professional. Whatever it is, everyone today is creating content in one form or another. And for the brands that are out there, they want to connect with that, user-generated content, because that is what's real to consumers today. I trust this brand more when I see other people that are like me using it and liking it. And so Trend helps connect those two sides together. And they're another company actually that's moving their headquarters here to Miami. So super excited to help them connect even more within this community.
The secret that we're all going to uncover right now is that Maria got in touch with her gardening company through Trend, right? Right, Maria. So like they've been the #1 product placement company on the Miami Tech Pod. If you're watching on YouTube, you see without fail landscapers in Maria's backyard every single time.
It takes a lot to maintain all these palm trees.
And you have the best looking yard out of it. Best backyard.
And so Maria, you got them on Trend. Is that what we're gonna cover
definitely. Here? That's the joke. We inevitably have to pause every other Friday at this time in between them walking behind me and running their equipment. So we joke that they have the best product placement.
Yeah, I mean, to tie a little bit more into Trend, I think what's super interesting about this, and you see a company like Cameo obviously doing big things. It's nice we have Steven based in Miami. These are, celebrities and folks that obviously have big followings, but there is an emerging trend called micro-influencers. And effectively what a micro-influencer is somebody that has roughly between 25K and 100,000 followers on like a social media platform. And usually they're built like around a specific segment, topic, or interest. Yoga instructors, somebody that's focused on the ketogenic diet, somebody that's focused on CBD. It's like everybody kind of focuses on their own audience. Brands will sometimes see, many of the times actually, better ROIs doing campaigns with these micro-influencers because the target audience is so segmented and so focused than it would be to go with a C, B, or an A-list celebrity doing certain promotions. You get more ROI for your buck. So Trend is focusing a lot on that segment. It's a very fast-growing segment in advertising. So a company that's dedicated on a certain thing can focus on what are the top 5 or 10 micro-influencers that I should be working with to get my message out and build campaigns around it. We think it's a super smart play. And it has a lot of potential. And Ramon, the founder, is awesome. He's relocating to Miami in the next couple of months. So, hopefully we'll be seeing him around quite a bit.
That's all. Are we going to be seeing him at the Wednesday happy hours, Chris? Is that?
He'll be there starting in, I think, middle of September. Yeah.
Shout out to this is a perfect opportunity to plug. Shout out to the every other Wednesday Miami Tech happy hour that Adamo and our good friend Natalia plans.
It's amazing. It's still going strong. It's getting strong every week. It's really wonderful. I'm so happy it's happening. People, we all miss people. That's what it seems like.
Yeah, I was there this Wednesday and it turned into quite the dance party.
Good. I missed that part.
Wait, what?
I saw a video of Maria breaking it down. That's my good time. But late night, I saw Maria on the dance floor video.
This is where we're missing out on a huge opportunity to entertain our YouTube audience. We need this video clip of Maria dancing spliced in here, and any other incriminating evidence of other pod members doing stuff at this Wednesday happy hour. So keep that in mind, guys. Next time,
what happens at the happy
keep
hour?
Keep your cameras rolling.
At the happy hour.
Yeah. Is there a no? There's no phones policy at this thing. I mean, I feel like we want to broadcast as many. We want to amplify. That's the word I'm looking for.
One day we should record from it. We'll get it all set up.
Yeah, let's do it. All right. So
next vlog. Don't worry.
Back to Flamingo Capital. That's a good one.
Yes, Adam's vlog.
Yeah.
So let's level set. So for folks that are not familiar with syndicates, can you explain the model, how it works?
So one of the cool things about syndicates is that previously, as an investor, you're doing one of two things for the most part. You're investing in publicly traded companies on the stock market, or you're an angel investor writing your own private checks into private companies. And typically, as a company that's raising money, I'm not going to spend my time taking angel checks. Let's say the smallest that I would take is 25,000 probably, or 50,000. Nowadays in 2021, who knows? Maybe I'm not doing that for less than 100,000. But usually 25, 50,000 as an angel investor, smallest check that I'll take. And why is that? That's because as a startup founder, I have a cap table. And I don't want to have to manage a cap table with a million lines on it and then go through legal paperwork of all these people and the headaches of dealing with all of those on my cap table. And as an investor, maybe I want to invest into more private companies, but it's really tough to do that at such a large check size for many people. So what syndicates allows for is for folks to invest in private companies at a much smaller amount, as small as $1,000 through Flamingo, for instance. And that gets all rolled up together into a single special purpose vehicle, or SPV, that lives as one line item on the cap table. So what that means for companies is that as a company that's working with a syndicate, it's simple in the fact that it represents only one line on my cap table, one agreement, just one kind of main contact person to deal with. But that can represent an entire set of people and individuals, each of which can add significant value to my company. So if you take Trend as an example, this is a really valuable company for a syndicate because they work with SMB brands and micro influencers. So there's a good bet that most of the LPs have relationships on one or both of those sides that they can, since they're now investors in Trend, really bring value to the company and by providing those relationships. And on the investor side, it's really cool because as even company founders oftentimes are part of syndicates because they see the great success that other friends even or colleagues are having at their startups. They want to be able to invest, but maybe they're not going to go write $25,000, $50,000 checks. This allows them to invest, like I said, $1,000, $2,500 or more, into these companies. And for it to just make, again, going back to simplicity, make it simple for the founder of the company and for the investor that's investing.
So in a traditional a VC fund, the fund raises money from LPs and it takes fees. Typically it's 2% a year in fees plus 20% of the carry or the profit for those who aren't familiar, right? So how does that compare to what a syndicate charges? Because a syndicate is a lot of work for you guys to put together still. So walk us through what that looks like.
Great question. So like you mentioned, traditional fund structures are 2 and 20. Through syndicates, one of the beautiful things is that as an LP, a limited partner of this, I'm not just blindly giving my money to Flamingo and then they're trusted to invest it in whatever. Maybe that would be good for some people, but it gives them the flexibility and ownership to take responsibility for what they're investing in. So Flamingo is tasked with sourcing these deals, doing the due diligence on these deals, researching and finding what the best company is that we think gives, that we're super excited about and want to invest in and share that deal flow with the LPs. But the LP gets to actually decide whether or not they invest in the deal at all. So maybe I don't like Trend. Okay, well then you don't have to invest in it at all. Maybe I like Trend a lot. Well, then I want to invest a lot of money in it. Maybe I like it a little bit. I can invest a little. So it really goes back to that flexibility. And then insofar as fee structure, they're paying 0% in management fees. So there's no capital requirements or capital contribution requirements. You're not forced to put up $50,000 up front and then allocate that. That's not how the syndicate works. You can choose what deals you participate in. You can choose your investment amount in those deals. There's 0% in terms of management fees. And then the syndicate charges what's called a carry, which would be like a performance fee percentage on successful deals. So deals that go on to eventually have a liquidation event, whether that's a exit, IPO, what have you, and those deals make money, then Flamingo would take a percentage of that deal, typically about 20%.
So was this, thank you for explaining and all that. So was this ever a discussion as to whether or not you guys should do a rolling fund or a traditional fund instead of a syndicate? Because that's the other popular, trendy investment vehicle popularized by AngelList, right? Making all these things so much more accessible so you don't need a ton of lawyers. So Chris, was this something you guys were thinking about?
Yeah, we were going to do originally, Aaron and I, a rolling fund. But I thought that it's probably best to get our feet wet with the syndicate. Oh, sorry, I'm muted. Originally that was the idea that we were going to roll with. And we thought that would be good to get our feet wet first with a syndicate, have a year or two of success, and then revisit doing a rolling fund or our own fund. So I think this is a good trajectory to get there.
Let me ask a question, right? Because you guys, how many folks are in the syndicate? Can you disclose that, or is that something that that you want to talk about at all? Because I have a question that's kind of dependent on that info.
We're about at 200 now, so it grows every deal. Kind of like as you put more things in the world, that people see them across AngelList, and then they end up referring friends over, or partnering up with other syndicates too. So that's kind of our strategy, is get more syndicates not from Miami to invest with us, and that gets us more of a deeper LP list to people who don't know Miami things yet, or just trying to learn them. So it's good for us to have that.
And it's probably, I mean, it's great for the community in general, right? Like you're through Flamingo Capital, you're just increasing the total amount of awareness into these deals for Miami companies. A couple questions come to mind here. Like, as the number of members and LPs in the syndicate grows, you're essentially going to have a responsibility to grow the allocation that these companies are giving you guys, right? Because otherwise it's going to get like really competitive. Do you ever plan, how do you guys think about that problem? Do you plan to like put, higher floors on check sizes, or like, ceilings on check sizes to like give everybody an opportunity to get into the deal? Or is it just first come first serve? Or is it like, how do you think of like the efficiency of the allocation and how to spread that around the syndicate?
Yeah, each one kind of varies by deal basis. So if the company is very kind of sought after and they have room for a larger check, then we can do that. And then go find a couple other partners as syndicates to join us in that raising. So we can offer, $1 million, swath of capital if we think we can get there with us and other LPs and other syndicates. And there's also, if we want to keep it small, we do 100K. That's kind of the minimum that we raise for more like localized kind of like pre-seed seed stuff. So it really depends on the deal, and I think we can flex up at any time. So we have a few deals in the pipeline that are probably bigger ones that we're going to have larger allocations in, and that's good for everyone really involved in our syndicate who hasn't had the exposure prior. So for us, it's like we can help our friends and people in our network, and then people who are brand new to us get involved in things that they never would have had a chance to do before.
And are you guys going to try to also get space into future rounds of these companies, or stay like pre-seed and seed? Are you going to try to also do some pro forma into Series A, or like what's the strategy there if you're really just hot, or the members of the syndicate are just like really hot on these companies as they grow?
Yeah, we'll definitely do pro rata as we think it makes sense.
So
if the company's doing great, then we'll take our pro rata and put it back out. If the company's kind of still figuring it out, we'll kind of wait and see.
So what kind of companies are you guys what's the thesis? Is there a specific industry focus, or is it pretty industry agnostic?
And does everyone get a colorful shirt, Chris, when you bring them on?
That's a good idea. We should definitely send them a care package of jams and Flamingo gear. It's in the works for sure. As far as our thesis goes, we're really opportunistic. I think all of us have a background on tech platforms in general. So that's kind of what we kind of tend to go towards, like this SaaS enterprise level idea with revenue that actually repeats. But we're pretty agnostic. I mean, we're all like, hey, it's a cool idea. I could see it being huge. We're gonna get behind it. And then also something we see a thing that's like is in need in the world that just people aren't aware of yet, and that's kind of where we find the big wins once in a while. So if people have some big ideas, we'd love to talk about them as early as possible and get to a point where we're ready to actually syndicate.
It's a good segue to, I think, like just a broader question around this is, do you guys think it's time for like the United States to just move away from this like ridiculous policy, in my opinion, of requiring accredited investors or requiring accreditation essentially to invest in private companies? I always have the belief like this is a company where you can like be sent to war at 18. You can like drop $50,000 at a blackjack table, but unless you either make $200,000 a year for multiple years or have $1 million net worth, you can't invest $1,000 in a private company. I think it's like really, really stupid of us to kind of like put up those gates, to investing in early stage private companies. But what are your thoughts on like, is that an antiquated, but is there a flip side to that? Is there something I'm missing as to why this is a good rule for investing?
Listen, I think startups are obviously one of the riskiest investments that you can make as an investor. We'll start there. And that being said, it's my opinion that we should open that investment up to anyone. I do think that today you're seeing a more risk tolerant generation than any generation in history. And you even see that reflected now in the public markets where you have meme stocks that are traded like crazy. I mean, the volatility there might as well be, some of these are more volatile than some privately held companies, especially at later stage privately held companies. And then you also see a loosening restrictions across other areas like online sports gambling, for instance, right? Which Florida just approved. So this seems to be like the last bastion for regulation in terms of that. So I definitely think that it should be opened up.
I'd love the rest of your thoughts. What do you guys think? Will, Chris, Brian, like Maria?
I mean, Adam summarized it perfectly, and I echo your sentiments as well, Cesar. This is an antiquated law that kind of hasn't caught up with the times. In general, investing is something that, I think, there was a lot of gatekeepers around just in terms of investing in general that happened, with investing in stocks. You needed a stock broker and all these different things. And now you can go online, E-Trade, and now Robinhood, which is geared towards millennials. And they're now being introduced to trading in public markets. Obviously, the private sector is going to be the last, one to kind of fall. And there's all these regulations around it. I think the rise of entrepreneurships and the amount of people that want to start companies and be entrepreneurs is on the rise in a massive way compared to where it was 5, 10, 15 years ago. So as people, get more acclimated to this world where, their friends and their peers, their family members, the folks in their community are starting companies, they're going to want to support those companies and be a part of that ride. So I think we're waiting for the tailwinds of that to come around, and we're going to open up these laws that are totally antiquated to allow everybody to invest, not just accredited investors, which, it's kind of just an arbitrary set of requirements, honestly, that don't make much sense to me. So I agree. This is an antiquated law. It looks like changes on the horizon. You already see things like Republic and a few other platforms that allow people to kind of crowdfund and invest, kind of dancing around a few things. And I only think it's a matter of time. I would imagine within the next few years, that restriction should be removed completely. And I hope it is. The government has moved a little bit, right, on it. It was like way more strict than it is now. You can qualify as an accredited investor by like, if you're an expert there's like some type of expert clause where if you're like really, knowledgeable about an industry, you can like self-certify that. And like, there's an on-ramp to accredited investing, but it seems really stupid to me that I can like, blow an entire account on an e-brokerage by like betting against some really, really stable and important stock just because of like volatility. But then I can't like, have a more long-term investment in like backing some founder that's trying to change the world with $1,000, right? Like, and I think that's, we'll see. I don't know. Soapbox. I'm off my soapbox. That was where, I wanted to end. Maria, thoughts?
Well, can you guys share how founders can kind of get in front of you guys?
We have a link via Airtable. That's a submission link. You can submit your startup with your deck and your notes on your startup, and we meet weekly to go over them. So open access to us.
And if folks want to join the syndicate, how do they find you?
Also on AngelList, we can share a link after the show. I think it's like searchable. You can search for us on the syndicates, or we'll send you a direct link. They're all pretty public on there.
All right, plug time. Adam, how's the vlog going?
The vlog is great. I think, honestly, every entrepreneur that's out there, an investor, I think everyone should try doing this because, and here's why. I think as a founder, the number one job that you have is to be a storyteller and get people to understand your vision. And your job is to get a bunch of other people to believe in that vision so much that you work crazy hours, you do all these crazy things, you take all this risk because you believe in the vision that you have. And that vision is often told in the form of a story. And so the vlog is a story. It's a story of a day, a week, a life, whatever it is. And the more that you tell stories, the better you get at telling stories. And so I would encourage everyone out there to start a vlog, no matter how you feel about it, as a way to practice your storytelling. And it's a lot of fun. And I think maybe I'm like...
How can people find it? Why don't you...
They can search Adam Garfield on YouTube. It's just under my name. And it's a fun project. Maybe I'm like more old school in that I like long form video versus like a 15-second TikTok. Maybe you tell your story in that way of today's media. But, you know, I think in terms of hobbies, I enjoy like flying drones and taking time lapses and that kind of those kinds of activities. So that weaves well into like a story that I want to tell. Got it. Chris, Will, do you guys have anything you want to plug before we wrap this week? It's a beautiful Friday afternoon. I'm sure everyone wants to get out there and after it, but anything you want to share with the listeners before we wrap?
Yeah, come meet us in person at happy hours every 2 weeks if you want to meet us, and talk about whatever. Also, feel free to DM us on Twitter.
Where are the happy hours for the ones that don't know?
They're at the Freehold every other Wednesday. It's in Wynwood. Also have a link to a handy little reminder if you need one.
Every other Wednesday at Freehold, people should come up to you because you wear distinctive shirts and shoot their shot, right? And pitch. That's the point of these happy hours.
They can give us their 15-second pitch for sure. Probably more effective to email us their whole thing, but yeah.
No, I want you to get bombarded with in-person pitches for the most ridiculous stuff.
I'll do an hour.
People do not hold back. Any idea you've ever had that you want to raise money for, ask Chris. This is
and
my
then come
permission
dance
to
with
you
me
all.
after you shoot your shot.
Wait, was there a DJ or something? Like, how did this turn into a dance party?
Yeah, it's Miami. Of course, there was a DJ.
Duh.
You don't watch my stories.
I don't. Was there always a DJ, or is this an upgrade to the happy hour, Chris?
We've had music at all times. This week was, I think, a DJ planned by the venue, so it was a surprise for us.
They got to be killing it, right? Like, I feel like these things are really well attended.
It's getting popular. I think it's getting popular.
And the pizza is out of control good.
Totally good. I love the pizza. They have two types. They have the outside pizza and inside pizza. The outside pizza is like New York City style slice. The inside one's like nice, like, smaller personal pie, thin crust. So
it's better than the Wood Tavern pizza from back in the day.
I think so. Yeah.
I heard it was the chef from Lucali, the former chef of Lucali.
Wow.
That would make perfect sense because it tastes very similar to Lucali. It has that good crispiness, but also like nice. I don't know. I'm not a restaurant critic here, but it was
Only wine.
All right, episode 32 of the Miami Tech Pod. Chris, Adam, Will, good luck with Flamingo Capital. Keep bringing me amazing deals for me to invest in. Space them out for my wallet's sake. I appreciate it. But no, this is really neat, guys. I know the entire community is rooting for you, and it's neat to have this much energy around betting on the success of Miami founders. So it's glad you guys are doing it.
Yeah, thank you.
A lot of fun.
Hit us up, and again, no warm intros needed. Come in cold. Just send us a note.
You heard it. All right, everyone. That was episode 32. Make sure to hit us up on Twitter. We're finally over 2,000 followers on Twitter. So thank you to everyone out there that are following our hot takes and memes and episode updates and all of that. And we'll be with you on episode 33.